Let's have a look at task 7 from the first sample assessment of applied management accounting. In this task, we're looking at performance indicators, and the key skill for us is to have memorized the various formulae for the ratios and performance measures for judging how well a business is doing. So let's start off with the first paragraph. Billy's Coaches operates a park and ride service during the working week. The service operates for, now notice there's some numbers here, and we need to just be aware that the general approach for any of the AAT assessments, if there is a number included in the text, it's there for a reason, and we'll need to be using it in our calculations. So it tells us the service operates for 5 days a week for 52 weeks a year and uses a 36-seater coach. In 20x8, the charge was £5 per day per car for parking and transport, but the charge is now based on the number of passengers. The number of car park spaces and journeys per day have remained the same. So the results for the last 2 years are summarised as follows. So we've got a variety of measures now for the 2 years 20x8 and then the current year 20x9. So we've got our turnover, variable costs, and our gross profit, then our expenses, operating profit. So, and then we've got some other details here. So our net assets, that's going to be from our statement of financial position, isn't it? And then separately, what are our fares? And we've also got some other data, non-financial data. So the average number of passengers per day and the total number of customer complaints. So the first part of the question asks us to calculate the following performance indicators for 20x9. We need to put our answers to 2 decimal places. Now remember, this element of the question is going to be marked by a computer, so you need to make sure that you follow the instructions, because if you don't have the right number of decimal places, then the computer will think you're just wrong. So they've given us 20x8 already, so we just need to work out the figures for 20x9. The first of these is our gross profit margin. So our gross profit margin is going to be our gross profit divided by our revenue. So we're trying to work out what is the percentage of our revenue left over after we have deducted the direct costs of providing this service. So we've got the 78,000 and we divide by the 340,000, and that gives us a figure of 22.941. Now we need our answer to 2 decimal places, so that's just going to be 22.94. So we can put that into our table, 22.94. So we can see there's a nice improvement on the gross profit margin there. The next one then, it asks for the variable costs as a percentage of turnover. So our variable costs is that figure, and we want that as a percentage of the turnover figure. So we want to calculate 262,000 divided by 340,000, and that gives us a result of 77.0588. So we can see that when we round to 2 decimal places, that's going to give us an answer of 77.06. Yeah, the 8 causes us to round the 5 up to a 6. The next one then is our operating profit margin. So that's going to be our operating profit divided by our revenue. So in this case, we want to identify what portion of our revenue is still there after we've paid for all the direct costs and the indirect costs. So we want to take our 38,000 and divide by 340,000, and that gives us 11.176. Again, we're rounding up to 2 decimal places, aren't we? So that's going to give us 11.18. Then we want our expenses as a percentage of our turnover. So we've got our expenses divided by our turnover. And when we do that, that's going to give us 11.764. Yeah, we're rounding to 2 decimal places, aren't we? So the 4 is less than 5, so that's going to give us 11.76. Next, we want our return on capital employed. So for our return on capital employed, we want to look at our operating profit, but we want to divide that by the amount of capital we've put into the business. Now, the table doesn't tell us about capital, but it does give us our net assets figure, which is the assets take away liabilities. And assets take away liabilities would be the same as equity. Okay, so our equity being our capital employed in this case. Now, arguably, there's another way of working this out, but with the information they've given us, the net assets figure is going to be the best figure that we can use for our denominator. So we want the 38,000 divided by the 114,400, and that's going to give us a return on capital employed of 33.216. We want to round to 2 decimal places, so the 6 is bigger than 5, so we're going to get an answer of 33.22. Well, after that, then we have our asset turnover. So for asset turnover, what we want to do here is look at how much turnover we're generating, how much income are we generating as a proportion of the amount of capital we've put into the business, our assets. Okay, so again, we don't have the total value of assets because we could use that on our denominator, but in this case, we only have our net assets. So we want to take our 340 and divide by the 114,400. So we can see that our assets are generating 2.972 times their value in revenue. Okay, we're rounding to 2 decimal places, so we want 2.97. And so we've got all these assets, we've got 114,000 of assets, and they're generating income, so they're generating almost 3 times their own value in income. So that's going to be then for our answer of 2.97. And then we want the average fare per passenger. Well, we have quite a bit of information to use here, including the numbers included in the text at the beginning, because we've been given our turnover, so that's the total fare income. We've got our number of passengers per day, but we don't operate for 365 days a year. You know, we only work for 5 days a week, 42 or for 52 weeks a year. So that tells us then, so 5 days a week for 52 weeks, that means we operate for 260 days in each year, and we have an average number of passengers of 655 per day. So that tells us that over the year we have travelled with 170,300 passengers. Now the question what's the average fare for passenger? So we want to take the 340,000, which is our total income, divide by the 170,300, and that gives us an average of £1.99.6 per passenger. Now we want to round, don't we? So that 6 is bigger than a 5, isn't it? So that means we need to round the 9 to a 10, and we can just keep on doing that. So yeah, we're going to have £2 as our average fare per passenger. Okay, so we can put that into our answer. And then the last one then, what's the increase in customer complaints? So that's our last figure on our table. So we've got our 99 at the moment, and we want to divide by last year. So 99 divided by 60, and that gives us 1.65. So that means we've got a 65% increase in customer complaints. So the last part of the question, that we need to analyse their performance. So we've got 12 marks available for this. So we need to make sure that we have enough comments to be able to get a pass here. So we want to earn 70% to get a pass, don't we? So it means we need to have at least 9 comments to be able to get a pass. Now, in the marking scheme provided by AAT, it does say that you may have made some mistakes with some of the numbers you've included in here. So as long as your commentary is relevant for the numbers you've put in your answer, you're still going to get full credit. Now, before we start looking at the ratios, it will be useful to just comment on the figures that we've been given in our text. And some percentages may also help us here. So we can see, for example, that turnover has increased from 288 to 340. So we can see here that we have an 18% increase in our revenue. So just by stating that is going to give us a mark. Now we can also see that our variable costs have gone up as well. So 262 divided by 236. So we can see that our variable costs have gone up by 11%. So that's good news for us, isn't it? And that's part of our commentary. Do say whether it's good or bad. So our turnover has increased by 18%, but our direct costs have only increased by 11%. So that's good news. So it probably means that our coach, remember our coach has a 36 seats, that it probably means that we have a great occupancy of those seats now. So our costs have increased, possibly because of fuel costs, but our turnover has increased much more because we've got more people sitting on our coach. So our journeys haven't increased, the amount of fuel we're using hasn't increased. The cost of the fuel probably has though, and there's probably inflation for the coach driver. But yeah, it looks as if we have better occupancy of our coach now. So we can see that our gross profit compared with last year has increased by 50%, which is the combination of our passengers increasing, but our costs not increasing quite so much. Next then, what about our overheads? So our overheads have increased from 36 to 40. So that's again another 11% increase in our expenses, which may be related to inflation and perhaps the cost of the license for operating this park and ride service. But what about our operating profits? So we've got 38 divided by 16. So that's really, really good. So we've got a 138% increase in our operating profit. Now that's really, really good. So notice that our gross profit has increased by 50%, but our operating profit increased by much more. And that's because we've been able to control our overheads significantly. There's only a 4,000 increase in our overhead costs. So with some really good cost control here, we've been able to improve our operating profits by quite a lot. So let's look at the ratios and let's see what story that tells us as well. Although there's going to be some duplication here in terms of our description. So we can see that our gross profit margin has gone up. So that's really good, isn't it? And we can see it's gone up by 4.89 percentage points. Okay. So notice our gross profit has increased by 50%, but in terms of the margin, it's gone up by only 4.89 percentage points. Okay, so that's good still, and we've already discussed why that's happened. We speculate that the passenger numbers have gone up, but our fuel costs haven't gone up so much. And then what about our variable costs? So yeah, our variable costs as a percentage of turnover has actually gone down, hasn't it? Now why is that? Because our turnover has gone up quite a lot, but our variable costs haven't gone up by quite so much. So yeah, our variable cost, our fuel costs and our coach driver cost haven't increased by quite so much as our occupancy on our coaches. Now what about our operating profit margin? So that's improved as well. That's also gone up. But notice that's gone up by 5.68 percentage points. So it's always useful to compare the movement in gross profit and the movement in operating profit margins. So we can see that the operating profit margin has gone up by 5.68, which is better than the movement in the gross profit margin. Because we would expect, wouldn't we, if we've improved our gross profit, then that should cause the operating profit to improve as well. Because remember, the operating profit is a figure that's below gross profit. So yeah, any improvements here should also be shown in operating profit as well. So we expect a minimum increase in the operating profit margin of 4.89. But we've actually seen 5.68. Well, that's because we've managed to control our overhead costs really, really well. So that means that we've made a nice improvement in that operating profit margin. And so again, always useful to compare these two numbers because it tells us whether or not we've done really, really well. Yeah, possibly our gross profit margin may have gone down by, say, 4.89. But if our operating profit margin had gone down by less, then it would suggest that we've managed to still control some of those overhead costs. So moving on then, we've got our expenses as a percentage of our turnover, where we've already identified that we've got some pretty good cost control here. So yeah, that's really good. So even though the expenses have gone up, they've not gone up very much in comparison to the increase in our income. Now our return on capital employed has gone up significantly, so almost 3 times better. Now this is a combination of our fair income going up, so we're just making a lot more money and we've been controlling our costs quite well. So yeah, we're just much more profitable. But also this is because our assets have gone down in value. So potentially that's because of perhaps the depreciation on our coach. So because our assets are less valuable, they're basically generating more profit as a result of their value. And therefore, our return on capital employed has gone up significantly. And that also explains why our asset turnover has increased as well. But in this case, yeah, we're comparing revenue rather than profits. So yeah, we are just a much more fair generating business, and the value of our buses have gone down. Now notice also that the average fare per passenger is £2. That's gone up a little bit because remember previously, if you have to go back to the beginning, it told us that originally we charged £5 per day per car, but we don't do that anymore. Now we're charging per passenger. So we're making a bit more money as a result of that, aren't we? We're getting £2 per passenger rather than £1.91. And that may be a cause for why there's an increase in our customer complaints, because it means that if people were car sharing before, now they're paying by person rather than by car, so it's become more expensive. Imagine if you have 5 people in a car. Previously they were paying £5 a day, but now those 5 people are going to be paying £10 a day. So they're not going to be very happy with that, are they? But why else could they be complaining? Because we can see that there's been an increase in our passengers. We can see that our occupancy is better. And because we've got the same number of car spaces and journeys, potentially people are having to wait longer to get a bus, and those buses are more crowded. So that may be another cause of the complaint.